Hi, thanks for joining us on today's webinar. We're looking to look at the reasons and basically how to avoid underinsurance. Today on our panel is myself, Steve Barnes. I'm the Associate Director at Hamilton Fraser, controlling our main scheme, which is Total Landlord Insurance. I'm joined today by Melissa Charles, our Senior Claims Technician. Melissa has dealt with various claims over the years. Unfortunately, we've had some large fires, floods, which everybody dreads, and with our Premier policy, also some malicious damage claims. We've also got Will from rebuildcostassessment.com with us. Will's been with Rebuild Cost Assessment since 2017, has over 10 years experience in the construction management and cost planning, both as a quantity surveyor and a project manager. And Will, if you would like to mention a few, sorry, apologies, I'll go with Hamilton Fraser first of all. Hamilton Fraser Total Landlord Insurance was created back in 1996 to meet the needs of landlords. We offer two simple policies, one's essential and one is Premier. Both policies will cover the normal structural damage to the buildings caused by big events like fires, floods, storm damage, and your normal wet perils. However, our Premier policy also covers extras like malicious damage or theft, which can be caused by the tenants and or their guests. We have an in-house claims team which deals with over 80% of the claims that we receive from our clients. And as a result of this, the turnaround and dealing of claims is far quicker than waiting for insurers to get involved. Due to the service that we've given to our clients, not just obviously at the inception of the policy, but more importantly, when the thing that matters most, they have to make a claim, we've been fortunate enough now to win Best Landlord Insurance Provider for 4 years on the trot. So yes, pass you over to Will to talk a little bit about Rebuild Cost Assessment.
Okay, thanks, Steve. Yeah, so rebuildcostassessment.com, we were set up about 4 years ago to tackle underinsurance. It's the one survey discipline that we do, so we only look at insurance rebuild valuation work. We're very, very specialised in that area. As you can see, we're an RICS regulated company, as we'd expect us to be. So that means we follow all the RICS procedures, protocols, etc. And we're also ISO 27001 and FSQC registered, something that's really important for insurers and brokers. So what we're looking to do is produce an open and transparent report. We put all cost areas highlighted in there. And we'll always put in the inclusive VAT totals, allowing you to apply the correct figure. We're using the same sources as loss adjusters would use. That's the RICS Building Cost Information Service. We've got other data sources available if you need to, SPONS 2020, industry data, all kinds of construction databases. And what we're doing is we're moving away from the traditional approach of rebuild valuation work, which is based on a site survey, and we're using desktop rebuild cost assessments. So whereas a site survey can be expensive, quite lengthy, can be quite invasive for the policyholder, our desktop surveys can be carried out remotely. Requests can be made online, can be carried out here in-house in our offices in Dorchester, and then the report sent out as a PDF 5 days later. So we're a team of assessors here in May House with surveyors overseeing every aspect of the work. And we do cross-check multiple data sources that are available online as part of our desktop survey. So that's remotely gathered information, following the RICS Code of Measuring Practice and using online databases.
Brilliant, thank you very much for that. So really what we're here to talk about today is obviously drilling down, obviously what is underinsurance, then looking at obviously how you calculate the rebuild value and the importance of getting a professional to assist and help you with that, common misunderstandings about underinsurance, then looking at a claim scenario that we've actually had in-house at Hamilton Fraser to show you how much that could mean to you as a client, then obviously some simple tips to avoid the underinsurance. And for those that stay on till the end of the webinar, we'll have some exclusive offers regarding LandlordZONE for our readers. And something to think about whilst we're obviously going through these slides is to have a think about how many properties you think in the UK, according to insurance companies, are currently underinsured. And I'm sure Will will give us the answer to that at the end. I'll pass you over to Melissa.
Okay, so what is underinsurance? Most landlords believe the sum insured for their building's insurance policy is based off the market value of the property, but in fact, this is incorrect and it actually works off the rebuild value of the property. If you insure your property for less than the rebuild value, then it is classed as underinsured. So what this would mean is in the event of a claim, insurers will not pay out the full amount, they'll apply a condition known as average. So say, for example, if your property is insured for 50% of the rebuild value costs, then the insurers are only liable to pay for 50% of the amount of the claim. It is important to remember that average can be applied even if the property is underinsured by, say, 10%, 20%, 30%. Insurers can still apply average.
Brilliant. Thanks for that, Mel. Pass you over to Will just to give us a talk through on how to calculate the rebuild value.
So it's really important when you're calculating the rebuild value to insure the property for the total cost of the rebuild. So that's not just the cost of building a new building, which could be calculated based on an area measurement and a builder's quotation. It has to include all the demolition, labour, materials and the professional fees on top of that. And it's really important to include all items as well, so including the foundations. They could easily be damaged in any large loss scenario, and so they will have to be replaced. Demolition can be extremely costly as well. So on a restricted site, you could be looking at a building that has to be dismantled by hand because plant and machinery might not be able to access the site. That's all going to increase the cost there. And when it comes to professional fees, an architect will be needed to redesign the building, a surveyor will be needed to manage the project. There may well be party wall agreements if you join other buildings. Local authority fees come into this as well, that's building control and planning. And these costs can vary quite widely depending on different factors. So if a building's listed, those professional fees are going to be considerably higher. Expensive locations in the UK attract higher professional fees. So moving on to talk about our report. Give you a brief overview of our report, why we set it out, how we do, gathering the information. You can see on page 1 on the left there, we've got all the headline information that you need, the policyholder's name, the address, the date the assessment was carried out, and all the headline numbers as well. So we've got the full rebuild amount there, excluding and including VAT. We move on to page 2. That's where we break everything down. We'll have the area measurement that we've calculated there. We'll have the rebuild rate per square metre. Professional fees will be in there as well as any other permanent structures around the building. So that's the car parks, walls, fences, etc. They'll be added in. And again, an exclusive and inclusive VAT figure. We'll always include some advice on VAT as well. So we recommend that policyholders look at their own VAT position, take advice if they need to from their own accountant or local VAT office, and find out exactly whether or not they need to include that figure. And then on page 3, we provide even more breakdown. So that's where we'll explain where we got those figures from, what databases we're using, how we've assessed that property. Is it a higher specification property, an above average figure we've used, or have we used a mid-range figure? We also put in the indexation there, so that allows for the different costs of construction throughout the UK. So for example, it's much more expensive to build in central London than it is down here in the southwest. We'll also put the rebuild period in. So this gives you a period of time that it will take to rebuild your property, including clearing the site, demolishing any remaining building, and procuring a contractor to do the works. So that's a useful figure there for business interruption, loss of rent, alternative accommodation, etc. And we'll always recommend a reassessment, and that's a period of between 3 to 5 years. And then moving on to the other 3 pages, we've got page 4 where we'll put a brief description of the property. This is where we itemize all the parts of the building that we believe are adding to the cost factors that we need to assess. We'll put the sources that we've used. So that's where you'll see Google Earth, Find Maps, Ordnance Survey maps, whether or not we've used local authority planning data, valuation office, etc. And then on the other 2 pages, we'll include some images. So we'll always include some street view images, some aerial views, and a map view as well. So we can all be absolutely sure we're all talking about the same building. So moving on to common misunderstandings about underinsuring. So many landlords believe that if they're underinsured, the insurer will pay up to the sums insured. But unfortunately, this is a common misconception. So if we look at the example below there, We've got a building sum insured of 250,000, and the full rebuild value is actually 500,000. So already 50% underinsured. So we've got a notional claim that's come in, £100,000 repair costs following electrical fire. However, that's not going to result in a payment in full. So in this example, many landlords believe that the insurer would just pay the 100,000 towards the rebuilding cost, as they're insured for 250,000. This is not the case. The average clause would apply here. Most claims or losses in the insurance industry are partial loss claims. So in fact, total loss claims where a building and the contents are totally destroyed are far less common. So, just a few percent of all claims. And if there was no underinsurance clause in insurance policies, many insureds would not insure for the full replacement value, and thereby an insurer would be unable to collect the full premium. And that's the premium commensurate with the total risk. So accordingly, there are underinsurance penalties in insurance contracts. So in this particular scenario, the policyholder is 50% underinsured, and as a result, insurers will only pay £50,000 towards the repair costs. So while it looks like they've saved money in the short term by not getting a professional valuation, and presumably they've had lower cost insurance over the years, in this scenario, they'll be out of pocket to the tune of £50,000. I'm going to pass over to Melissa for a real life example now.
Okay, so on the screen you can see a claim study of a claim that we took in November 2019. So a landlord called to report a fire at the property that the tenant caused, and there was extensive fire and smoke damage throughout the property. At the time of the claim, the property was insured for a rebuild cost of £88,000, but in fact it should have been insured for at least £124,000. So this meant that the property was only insured for 71% of its actual value. So the fire claim amount for the costs was calculated at £35,414, but because of the underinsurance, the insurers applied average and only 71% of the claims costs were paid out. So that was in the amount of £24,894. But because of the average applied, this meant that the landlord had to pay out of their own pocket £10,000, which could have been claimed on the insurance had they insured the property for the full amount. The two things that you can do to avoid underinsurance. So the first one is to conduct or have professional property valuations carried out. We would say that to have this done at least every 5 years. It is particularly important to have property valuations carried out if you have extended or altered your property, or if the property prices have also increased significantly. Another thing to do is to make sure that you have specialist landlord insurance. A standard home policy will not protect you. If you have a buy-to-let property, you need to make sure that you have specialist landlord insurance. Another factor to consider is to make sure that your policy is index linked to reduce the risk of underinsurance. So at each renewal, your building sums insured will increase by a percentage based on the BCIS House Rebuilding Cost Index, and that's to keep the property in line with inflation.
That's great. Thank you very much for that, Will and Mel. As obviously LandlordZONE readers, we've also got a discount under the rebuild cost assessment for members, which is use the code LandlordZONE20, and you can visit that at www.rebuildcostassessment.com/landlords. The price for this, including VAT, for a fully comprehensive professional report is only £127.99. So even if you exclude the two scenarios we've already given you, and you had a claim of say only £20,000 at 20% underinsured, that's £4,000 that you would lose even on a smaller claim. So for £127.99, it's well worth doing. And one of our large portfolio clients who's got properties in the Portsmouth and Isle of Wight area used this service about 3-4 months ago, and we couldn't believe how much they had their properties insured for against what the true rebuild costs would have been. And if they hadn't have increased those in line with the reports that we had, they could have had claims where they were vastly underinsured. So from your perspective, Will, how many properties in the UK would you say were underinsured?
So we say, based on our research we've carried out up to September this year, that 9 out of 10 UK properties are insured for the wrong amount. And of that 9 out of the 10, 80% are underinsured. So a considerable chunk.
Yeah, and then from your experience, do you think that's because they've had the properties for a long period, have just not gotten them valued every 3 to 5 years like you would recommend?
Yeah, I think that's quite often the case. I think renewals roll on year. I think a lot of people only really think about their insurance when it comes up for renewal, and once they've established the premium, paid the premium, set up the direct debit, whatever, any thoughts about it go away for another 12 months. So what we would say is, if you haven't had a rebuild cost assessment done for quite a few years, certainly over 5 years, then we would really recommend getting one done. £127.99. As we've seen from those examples, the application of average can be really quite costly. So to avoid that, get one of our assessments carried out and get yourself on the correct cover.
Yeah, couldn't agree more with that, Will. I think it's definitely lessons to be learned, and the money that you would save in the long run far outweighs what you would save in the short term. In addition to Will's offer, Hamilton Fraser Total Landlord Insurance are also giving a 20% discount for the next 3 to 6 months using the code LZ2020. You can either get a quote online in under 4 minutes, or you can ring our free phone number, which is 0800 6343 880, and our experts will be happy to talk you through the details and offer you a competitive quotation. So thank you very much, Will, for joining me today.
Thank you.
And thank you very much, Mel. And if you have any questions, whether that be for Will, Mel, or myself, if you can put it in the comments below. If you'd like, obviously, for Will or his team to contact you regarding doing an assessment, please put it there. We can forward it to Will. And the same, if you're looking for a total landlord insurance quotation, feel free to put it in the comments with some contact details, and we'll come back to you in due course. Thank you very much for listening today.